Good morning, good afternoon, good evening, folks. Michael Zuber, one Ritzel at a time. It is Thursday, and it means we get the three amigos back. How you doing? How you doing, Matt?
I'm doing awesome,
Yeah,
Mike.
thank you. And Dion, how are you? Still in Florida?
Howdy, yes, I'm doing great. Not too sunburned, ready for round one.
Yeah. And as people don't know, you were evicted last week, and there was a story about the eviction on my site. You guys want to check it out? I think I titled it Dion's Eviction, so should be easy to find. Yeah, Dion got evicted. Oh, that's fun. Well, hey guys, looks like we're gonna get more and more crash videos, bubble popped videos. Graham Stephan, 3.2 million subscriber, famous on YouTube, just did a video which all three of us has watched called "Housing Bubble Just Popped." So I thought we should talk about it. Dion, you sent that out to us, so I'll give you the floor first. What did you take away?
Well, I like that it said housing bubble just popped, and then he talks for 10 to 20 minutes about how the housing bubble's not popping.
Yeah, exactly. I'm glad I'm not the only one. I'm like,
Yeah.
Did I miss something? What happened? Yeah, that was pretty funny. How about you, Matt? What'd you take away?
Yeah, I mean the same thing. I mean, I really wish to a certain degree that you actually had to have experience doing what you're going to talk about. You know, we are all older, and so we don't talk about things we don't know about.
Yeah.
Because that's part of what comes with age is wisdom in a lot of cases.
Yeah.
I think there's a lot of unwise YouTubers out there that because they see some other titles and because they're clickbaity and because they have marketing teams, they want to put something out there that's going to get the most clicks. And at the end of the day, often they're completely out of their depth discussing what they're discussing.
Yeah. So I'm going to turn this one. We're actually gonna do a video too where we break down Graham Stephan's video, because he does talk about 3 or 4 interesting points. None of them talk about pop, but I do want to talk about. I think the housing market is broken. I think the Federal Reserve, one of the unintended consequences is they broke housing for the next 2 to 3 years. And what do I mean by broken? Well, interest rates have gone up between 200 and 250 basis points and might not be done. It has shook the entire sector to its core. We saw Wells Fargo this morning talk about mortgage demand down 33%, and that's a big deal. So I think we're going to have less. I think we just are going to have less transactions, and people still have to sell, death, divorce, all that stuff. But I am more convinced than ever that we're going to see at least a 25% drop this year, and by sometime next year we'll be down 50%. So I do not think a bubble popped, at least as intended as far as prices. But I think transactions are going to be in the low 3 millions very soon. And that's a broken housing market. Dion, what do you think of that?
Well, I agree. Transactions are going to die. So currently you were talking about Wells Fargo week update this morning, but about a week ago, maybe a little more, Chase announced you have to have a 700 credit score to get a mortgage, and they want 20% down no matter what loan you're getting.
Yep.
So less transactions and then limited buyer options. So I still see prices going up. It's going to be more qualified borrowers doing the purchasing. So prices are going to go up, but transactions are going to go. 3 million puts us at about half of last year. So exactly. It's a 50% drop. That's huge. And I've said this on a couple of videos. Agents and brokers should develop a side hustle. It's actually why Graham Stephan got into real estate. He was an agent and went 6 months without any commission, then got a big commission, and then went a long time without another. So he got some rentals to stabilize his income. Yeah. Which is what hopefully they've been doing.
Yeah. How about you, Matt? What do you think? Do you think the housing market's broken?
So my state's numbers are out. Last year, the median house was $300,000. This year it's $440,000.
50%.
440
roughly.
Yep.
That's crazy.
It's insane. And we're in the place where still everything is a few days on the market and it's off. It's still here. We're still here doing that because I think we had a lot of people. If you look at surrounding markets, Connecticut, New York, Massachusetts, they're all massively more expensive. and people are tired of what they're going through in those states, and they've moved north.
Yeah.
And they get a better quality of life. And now that they don't have to have proximity to their job because they can be remote, they're living here. And so that rising tide has lifted all boats. I mean, I will say that I'm concerned for my market because the velocity of that is way too fast. It's just way too fast.
Yeah.
Even with outside money. I mean, a buddy of mine listed a house. He said, we had 7 offers day one. He goes, we're just anything that's kind of sub 500,000. We're just not seeing any slowdown whatsoever. And so, yeah, I think that, a bubble is still forming. It's still forming. Like these guys want to call bubble. Remember when the bubble was in the mid 2000s? It wasn't in, it was being built in 3, 4, 5, 6.
Yeah, I have, we actually may do another video called The Bubble's Gonna Grow, because I think it's set up to grow.
Yep.
Actually, we will do that one. That'll be video number 3. But yeah, I want to go back to, because as an economist or somebody who studied the economics, you learn very quickly that most of consumer behavior is supply and demand driven.
Sure.
So I want to paint a picture for you too. And I want you to tell me if it makes sense. If you think I'm wrong, as always, tell me. So first and foremost, we're going to go back to 2018. I'm going to call that a balanced market. So for scale, we're going to call it 100 listings and 100 buyers, right? It was roughly even. You could argue it was 105, 100, but that's going to be our base. Yeah, ballpark it, right? Supply and demand equal. It could be 1 million, it could be 1,000, whatever you want it to be. Now let's go to 2020, kind of the end of the year. Once we're, the end of the year, people are moving. It's the most bananas I've seen. So what happened? Supply didn't really move a lot, so it's still 100. But demand went from 100 to 500 because rates are rock bottom low. We realize that a bigger house is better. We want a backyard. We want to leave California for Florida. All that stuff's going on, right? So 100, 500. Guess what happens? Prices go up in that scenario. And you hear crazy things like waiving conditions and 50K over and all of that nonsense, right? Now, 2021, the environment we're in today, where interest rates have shot up 250 basis points. We had rates low for 2 years. People are going to be locked in, the move up buyer. So what happens to supply, right? All 3 of us did supply destruction a week or 2 ago. We're no longer at 100. We're probably at 60 or 70 because some people will sell, just not as many. Now rates have gone up. The Fed is trying to destroy demand. It's called demand destruction. It's how you beat back inflation. And they will be successful. Unfortunately, it's going to go from 500 to 150. And oh, by the way, here we're still at 70. So for the folks calling for a bubble pop, yes, there may be a couple of markets where you see prices decline because their ratio is different. But an environment that is still 2 to 1 does not lead me to believe that prices are coming down. What do you guys think of that? We'll go to you first, Dion.
Well, the only thing missing in that was wage inflation.
Oh, of course.
We're still seeing wage inflation, and we're seeing regional wage inflation. Like Matt said, we don't have to work close to the office. If we remember last year, Pinterest paid $89 million to break a lease in San Francisco, paid all staff $20,000 to relocate. A lot of those people didn't buy. It increased rents because they weren't sure if they were going to get called back into the office. So for at least a year, they've been doing 1-year leases.
Yeah.
A lot of companies aren't requiring people to return to the office, turning those renters into buyers. So now we've got 6 or multiple 6-figure incomes from high volume locations like Seattle, San Francisco, San Diego, who can live anywhere and are now going to be buyers. So prices continue. The bubble is going to get bigger as far as price goes, but less and less transactions.
Yeah, we've definitely had a bubble pop and transaction crash and transaction again. And the other thing I love to point out is we called it first. This channel right here called it weeks and months before anybody else. And we're already seeing some of the big people come around. National Association of Realtors chief economist Lawrence Yun talks about it going down 10%. Let me just tell you, if he's talking about 10% transaction and he is supposed to be rosy, you know it's going to be worse than that. So
Way worse.
way worse. How about you, Matt? What do you think about my story of 100, 100, 500? Does it make sense?
Yeah, I think everything has to normalize, right? And I think that we've had a lot of buyers and not nearly enough supply. We're going to go down to still not enough supply.
Yeah,
but a
supply is
lot-
going to go down.
Right, but a lot fewer buyers.
Yeah, but still,
So they're going to correlate.
yeah.
But I think that the bigger issue is, what Dion called out earlier is what we've been saying for 5-6 months, which is, hey, if you're waiting outside the market, waiting to come into the market, debt to incomes are going to change.
Yep.
Requirements are going to change, down payments are going to change, and it's all coming around just exactly like it did in the mid 2000s, where everything got tighter. A lot of people with mid 6 credit scores start getting no answers. People with 38% debt to income are getting no answers. People that are looking at any sort of a property as an investment are getting answers where, yeah, we have a product for you. It's 25% down.
Yeah.
So that's why we always tell people, you need to have your best use of capital. You need to wait for a great deal. There's going to be more inventory coming. The number of good deals that I've passed on in the last month, I'd say probably six good deals. And now I'm seeing stuff that, even though we're seeing these massive increases in our market, I'm still seeing one record after another broken.
Mhm.
So this bubble just continues to inflate. It wasn't a bubble 6 months ago. It's a
Right.
bubble now.
Mm.
But I saw a fourplex in my market, basically 2 studios and 2 1-bedrooms.
Mm.
That building 2 years ago was probably about 400,000. They're up around, I think they're at 650 on this
Oy.
building.
Wow.
And I got sent the listing and I was like, can this agent do math?
Yeah.
Like, the guy can't do math, because what he's proposing is such a horrible return on capital.
Yeah.
He's making a fourplex with like a cap rate of like 4.5 or 5.
Right.
That doesn't make any sense to any investor that's investing in small multifamily. So I still think that, and the thing is, with those things jumping with those numbers, there has been one record after another broken for dupes, tries, and quads in these three cities I do business in, where, to the point that the one that was always the cheap one is now trading at what the other ones traded at a year ago, a year and a half ago. Like, the
Wow.
gap has just shrunk. So yeah, I think that you're exactly right. It's going to be fewer transactions. It's going to be better qualified buyers. And I think that they're going to have at least some inventory to choose from. But yeah, it's going to be interesting to watch. I got my popcorn. So
It's going to be a wild ride. We're going to talk about that episode number 2, just how the bubble can get bigger and bigger and bigger from here. But before we do, how can people find you, Dion?
Right here on YouTube, Dion Talk Financial Freedom. And I do live streams even when I'm traveling for scuba every Tuesday at 4 p.m. Pacific.
And yourself, Matt?
Lumberjack Landlord on Instagram and on YouTube, and Sunday morning live streams. This one's going to be a short one, about an hour.
Yeah.
Sunday.
And I do a live stream 7 a.m. No, not 7 a.m. 8 a.m.
Yeah.
Saturdays. Yeah.
Pacific time.
Pacific time.
Yes.
All right, guys. Thank you very much.
Thanks, Mike.
Ciao.